Hello, friends. Today we're taking a look at Hormel Food Corporation, ticker symbol HRL. Right now, trading at $32.72. I am looking at this company for two reasons. Number one, they're going to be reporting earnings this week. And the other reason is in the last month, they're up 5.4%, but year to date, they're down 28%. In the last 5 years, they're still down 28.7%. And analysts are thinking that there is a 23% upside if they get back to the $40 range, which if you look at this graph in the past 5 years before the big dip that just happened starting in August, they were trading about the lowest they were trading were somewhere around $39. So this could be a good opportunity for those of you that are dividend investors. They pay $1.13 dividend, which is at 3.45%. For those that, before we go into looking at this company, if this is a company that we will want to invest in, what is Hormel companies, I would just want to remind you that I'm just a YouTuber. I am not a financial advisor. I'm doing this just for educational purposes, and I would love to hear your feedback and your ideas for this stock, things that I may have missed, things that why you're bullish or bearish on this company. Just leave them in the comments. I'll check them and respond to them within the next 14 days. I really love this community that I'm building, and I thank you for being part of that. If you would like to subscribe, I will really appreciate it. With that said, let's jump into Hormel. I have a hard time mentioning the name of this company, so just being honest. They do a lot. They have a lot of different products. They're national and international. They also partner with different companies outside of United States. But some of the most known are, of course, their meats, their cold meats brand of Hormel. You have Ginny O's, which is the turkey. You have Spam, Planters with the nuts, and talking about nuts, Skippy. My kids love Skippy, and that is the kind of brand that we have at home. As you can see here, we also love this pepperoni, putting them in pizzas. That is amazing. Anyway, continuing to go through it, here's some of the different companies or brands that they have. Holy Guacamole, that is one of them. They have different brands, different names when it comes to other types of meats. And this is their Mexican brand, which is the Embasa and Chichis and Doña Maria, La Victoria. That's also a well-known Latino. I'm Latino, so I know about some of those brands. When it comes to pizzas, they have Happy Little Plants. I think this is their one of the brands that they have. And anyway, here's more of their brands. I'm sorry that I'm going super fast, but I think we're just going to jump right into the earnings, which is what I would like to be looking at. So, like I mentioned before, they had a big drop. If you see here, huge drop, and I think that was somewhere around in October. Earnings was around here, so they have had a big drop, and the last quarter, they had 11 cents of a miss on GAAP, and they miss also in revenue at $88 million. Upcoming earnings is going to be looking at 44 cents on GAAP of EPS, which is 14 cents higher than last expected EPS. And in revenue, they're looking for quite a lot of amount of revenue at $3.2 billion. Analysts are skeptical that they're going to be able to do well. I think so. This numbers, my understanding is, it includes 6 revisions down. So let's look at their numbers. When it comes to revenue, the last 10 years, revenue per share is been growing about 3%, and the last 5 years about 4%. So this is not a revenue grower. So when it comes to earnings, also you can see that it's a little flat. In the last 10 years, is been growing about 5%, but most of the growth, if you can see it, happened between 2013 and 2015. After that, it just kind of have remained flat. Past 5 years, it's -3. The 5-year average profit is close to 10%. When it comes to free cash flow, same thing. It seems to be kind of flat, going up and down between $1.25 and $1.65 or somewhere around there. So most of the growth happening between 2013 and 2014, with a big jump to 2015, and that's why the growth for the last 10 years is for a little above 4%. However, the 5-year average of free cash flow margin is 7%, which is not horrible. Book value per share has been growing steady. In the last 8 years, it's grown about 8.4%, and in the last 5 years, about a 6% annual growth. When it comes to return of equity, the average in the past 5 years is 14.6, which is not bad. I normally look at above 10% when it comes to this number. Return of equity is 10%. That's double of what I normally look for. Return of assets, not return of equity. Return of asset is about 10%. I look for a 5. Return of invested capital is at 11.22. Average in the last 5 years, which is above the 10% minimum required for me. When it comes to dividend has been growing pretty nicely in the last 10 years for 12%. So if you're a dividend investor, this is something that you probably will love. In the past 5 years, it's been growing about close to 8%. When it comes to debt, it's after the pandemic, 2021, 2022, they have accumulated a lot of debt, which is probably something worrisome for some people. However, if you look at the average free cash flow in the past 5 years, if they were to continue to do that, and they have the ability to pay all of their long-term debt in less than 3 years, I look for 5 years maximum. Outstanding shares, this is a problem. They have been growing. And that will be something that I wouldn't like when it comes to holding this company for a long term. Actually, let me just make a little pause here and just go back and say I wouldn't be looking at a flat EPS like we have here, a flat free cash flow like we have here, or a growing outstanding shares in a company that I'm going to hold. The reason why I'm looking at this company, it has to be this more as a trade possibility, and the question is, is that enough margin of safety, or is it actually selling? Because this is the other question I'm trying to answer: is it actually selling at what is worth? I mean, if the fair value is $32, then there's not going to be a swing. I don't think so. The only reason that there will be a swing is if they're actually worth $40. So anyway, let's jump in. These are the numbers. Analysts, once again, the next 5 years, they're looking for flat There's no growth in this company, and this is why this company I wouldn't recommend. I wouldn't hold it on for a long time. Multiple valuation. This is when we look at what people have been willing to pay in the past. If we multiply the average revenue per share, or earnings per share, or free cash flow per share, or book value per share, or dividends in the past 5 years, and we multiply for the multiple, for the medium multiple in the past 10 years, we get these numbers. And when we add them all together, we see an average of fair price of, if you look at the average, $43. If you look at the trailing 12 months, of $46. So that is very consistent, close. So between 43 and 46. I like those consistent number. When we look at the average free cash flow per share, if we were to grow it at a 2.5% for the next 15 years, and we were to collect that free cash flow, that would be about $28 of fair value. When we're looking at discounted earnings valuation, if we were to grow the average at 2.5%, same that we did with the free cash flow, for the next 5 years, then multiply by 23 PE, that will give you a $45.84. If we discount it back to today, that will be about $23 per share. Warren Buffett's owner's earning valuation gives us a very close number between the average and the trailing 12 months of somewhere around $32, $31, $32. So when I take a look at the deep valuation numbers, they are telling me that will be the payback, the earnings, and the cash. The 20 cap is telling me that this company is fairly priced right now. However, if I were to look at the market, which Mr. Market is not very logical most of the time, it tells me that the market puts a value of about $46, $43, and we put both of them together, we can conservatively be looking at a price somewhere between $38 and $40. With that, if I were to take a 20% margin of safety, we're looking to buy somewhere between $28 to $31. So I think I'm going to be paying attention to this earnings call. If they have bad results and they drop in the $28, $29, I may buy a small position or something like that to as a swing trade, maybe like a short-term trade for about a year until they get back to the 40s, because I do think that the market is going to bring it back to the $40. That is my opinion. If I'm missing something, please leave a comment or a suggestion. If you find value in this video, please subscribe and click the like, and I hope that you have a nice one.